All right, everybody. Stocks by the numbers. Welcome back. Wanted to do a quick update as per request. ORGN Materials Incorporated took a symbol ORGN listed here on the Nasdaq. Stock up about 7% here on the day, closed 96.4 cents, up a couple of cents after hours as well. We swung below this 95-cent fib, back up. The company recently reported earnings. Looks like, in my opinion, I don't know, it almost seems like we could make the argument that we have potentially like two flags forming. I mean, we had a big run up here, and then you can see these top and bottom trend lines were kind of bouncing around. I know earnings were in here, but you can see we're kind of bouncing around, could potentially be flagging there. But then on the flip side also, this is when earnings came out. And again, I'm looking at the 1 year, I'm looking at the daily. So obviously every time frame is different. We know this, but just pointing out, what could potentially happen. And we see we have some big drops down here, and then we're kind of just going up and down inside of this channel. If we go to the absolute tops and bottoms of these wicks here, we can see it's kind of a trumpet, but if we do potentially, if we are in a mini bear flag inside of a longer term bull flag, then if we do potentially break down, you would want to see, well, let's say hypothetically it happens tomorrow. You would want to see right here about this 82-cent fib. And of course, that's going to suck because it's going to be a big drop from these levels. But also, it could technically not only bounce off the fib, but bounce off that bottom trend line here of this flag potentially. So, well, obviously, we may need a little bit more time to see exactly what pattern is developing. But I just wanted to mention, again, a couple of technicals there that might be on the table. I mean, I could be wrong. I don't claim to be an expert. But if we come back here, nope, clicked on the wrong thing. No, I'm not trying your plan. If we come back here, we can see that the company in the last couple of quarters has been actually generating some revenue. And we had a nice beat here, 6.8 on 5.2 estimates. Then we missed by about 50%. And then we come back here, estimates jumped up to above 12, and they come out with north of 13. And now this quarter probably had the initial chunk down because of the miss on the EPS side, posting a wider than expected loss, losing almost 12 cents a share. Estimates were only a loss of about 10 cents, so they missed that by about 17%. But you can see on the revenue side, it remained strong and actually came in above estimates. And I told you, in my opinion, that is what's going to keep the stock from completely cratering and actually potentially giving you a rebound back up there to that gap fill if you're looking for it. And they happen to post 6.825 million on estimates of 6.484 million, beating that by a little over 300K or roughly 5.25%. Again, gap fill potentially back here. We're looking for like 365, I believe the mark was, and I know a lot of people are waiting for it. And, we may potentially have these pops and these drops. And like I always say, you might have to deal with the short-term volatility to see the long-term growth. But also you need the company to basically not announce like any further delays with that Origin 2 project. I know they said, I believe, full capacity right now. So that, they need to increase that efficiency and that output on their end. And I believe that may not be happening until like 2025, 2026, I think, if memory serves correct. So we know that that project got delayed. So what that means is even if they're able to keep themselves afloat and actually report in line or potentially above these revenue estimates, we may potentially see some misses on the EPS side like we just saw over the next couple of quarters before Origin 2 is up and running. And also, you're not really, obviously we can go up and down, but we may potentially just kind of flatten out here and maybe, like top out, maybe even at like a 130 or a 150 and then come back down to the 90s, low dollars. And we may just kind of just like step up and down here until we get to 2025 and we get the updates on that new facility. But again, that's just my opinion. But revenue technically did beat, which is a good sign. The market cap right now touched below 142 million. We can see 3 quarters before that the company beat on the loss side and again reported a wider than expected loss last quarter. And we can see, looking at these numbers here, we can see Q1 this time last year, the company brought in 1.7 million and was profitable. But we can see here now, last quarter, we can see that our net margin really kind of dropped down big. And last quarter, we were at about minus 80% on 13 million. And now we can see we're at minus over 200%. And they brought in 683 million, lost almost 14 million to do so. So unfortunately, again, this is a situation where, of course, we could make the argument in some of the fundamentals that the stock is undervalued, but also at the same time, the company is currently in a state where they're burning about, anywhere from about $1.5 to $2.5 per share for every dollar that they're making, so to speak. So this is why I'm saying we can potentially run into some flatness over the next couple of quarters. Origin Materials aim to bring first manufacturing system online during Q4, which is obviously a couple of months down the road. Origin Materials at full capacity, initial systems to generate between 45 and 65 million in annual revenue, right? So right now we're kind of capped out if we think about it. So that's why, again, we could potentially just kind of see some stagnation until that Origin 2 gets up and running. But they technically did beat on revenue a couple of weeks ago. Again, these earnings were about 8 days ago here, May 14th. So technically coming to you a little late, but I know someone asked for an update. So of course, let's take a moment. We'll look at it together. Reaffirms pathway to profitability led by caps and closures. No additional equity capital required. That, in my opinion, is a very good sign. Accelerates procurement of multiple additional high throughput caps and closure production lines. Completes successful capping trial on commercial bottle. Okay. Quote, over the quarter, we have seen strong progress, pathway to profitability. We announced a few of our caps and closures manufacturing partners, and we continue to make excellent progress. Yep, everyone's excited. In addition, we are announcing we accelerated procurement of multiple additional high throughput commercial product lines for the first time. We aim to bring our first manufacturing system online during the fourth quarter of 2024 at full capacity. Our initial systems are expected to generate between 45 and 65 million in annual revenue. So if we go dead center of that number, about 55 million, and then let's just say we do like a 3x on that number, you'd be looking at 165 million potential market cap if the market cap again goes 3x the mid number of that range. And that would be like 1/7, or what is that? Like 14.3% from the current level we are right now, which would bring you kind of back into the low ones, excuse me. The caps and closure opportunity is massive. They always mention the size of the market as if they're going to completely take over and start generating that much revenue. It always makes me laugh. But anyway. Tens of billions. Yep. Yeah, beverage, non-beverage. We're also pleased to announce technical completion, capping trial. Apart from our caps and closure business, we continue to grow the long-term value of Origin platform by engaging multiple strategic partners, scale up biomass conversion technology, exploring high-value application development initiatives that could generate near-term revenue. Last but certainly not least, this quarter we are pleased to convert sustainable wood residues at Origin 1 into our versatile intermediates. This milestone in the scale of biomass technology generates valuable information. All this is exciting for our customers and team as we continue to execute in our mission to drive the once-in-a-planet transition to sustainable material. Now that's a line. Reported revenue. Yep. Yeah, again with the caps. Yes. Partnership with Paxis Global. IMD Vista. Quartered in Switzerland. Manufactures advanced camera systems that inspect thousands of closures per minute and which are expected to give Origin the ability to inspect billions of caps per year. Carbonated soft drink cap, lightest of its kind ever produced. Okay. 45-65 million. Where is... See, I don't remember the exact time frame with the Origin 2. First and foremost, testing formula in preparation for Origin 2 scale up. Okay, for Origin 2, we continue to engage customers. Louisiana. Okay, with updates to be provided. Despite near-term macroeconomic challenges to which the company is adapting through less capital-intensive revenue-generating initiatives, customer demand remains strong, as reflected by our total offtake agreements and capacity reservations in excess of 10 billion. We continue to engage with multiple parties to explore a variety of plant designs. Yeah, I don't know. It still might take a while. I don't remember exactly what the date was. I mean, I guess we can go back real quick. I want to say like mid-late 25, if it wasn't 26 maybe. So that's why I'm saying, like, this is good news, technically, that the company has now finally started to generate some revenue, and they're starting to beat estimates the last couple of quarters more times than not. Very, very good sign. So again, you know, we could see some life. I think I said last time we could potentially see maybe about like 1.5, 160, and of course we spoke about the gap fill back up to like 364 or whatever it was, and all of that could continue. That actually could happen even before Origin 2 gets up and running, as long as the company, again, continues to beat those estimates and keeps those losses in line, because we initially had a drop after earnings, and I think it's because of the cash burn. But cash right now, 146.6. Yep, they did 6.8. See, this time last year, 1.7, right? This is heading in the right direction. Operating expenses were 18.1 million compared with 13 million in the year prior, increase of 5.1 million. 2.3 increase in expenses, 2 million increase in depreciation expenses driven by Origin 1 coming online during the fourth quarter of 23. Okay. Net loss 13.9 compared with net income of 9 million. Adjusted EBITDA loss almost 13 million compared with a loss of 9.7 million. No, compared to a positive 9.7 million. Shares outstanding 146.5 that are subject to forfeiture based on price. Okay, we're moving. Revenue of 25 to 35 million for all of 2024. Net cash burn between 55 and 65 million. So this is what I mean. We're right now, we're currently in the mode of burning roughly like $2 for every dollar that we're bringing in. And that, of course, can only be sustained for so long, but I know they weren't talking about, you know, any changes to equity to potentially raise capital. So, you know, we may be able to weather the storm here and come out the other side. But again, that's why if the stock does like drop back down potentially to the 80s, the 70 cents, and you know, and then it has a little bit of a bump back to 110, 120, but then pulls back and kind of like stays stagnant at around $1, like you really can't be shocked, because again, even though they have the equity there and the assets there, the revenue just seems to be stagnated, and again, you're currently operating at a big loss here, losing $2 for every dollar. So until that starts to head more in the right direction, the stock, in my opinion, is not really going to start rallying. But you know, spring together, who knows? Spring together a couple of earnings beats, keep those losses in check. Who knows? You know, you might see $2 to $3 here with this one. But yeah, and that was before earnings. And we could just check the forecast real quick for you here. And it looks like everyone, again, is pretty bullish on it, even though we only have a couple of analysts watching. But we have one giving a strong buy, one saying to hold. Lowest price target here, $1.35. Highest price target, $5 a share. And it's unfortunate that they did post a wider than expected loss, because they were keeping it in check for quite some time. So it kind of, again, it doesn't necessarily ruin the situation, in my opinion. What it does is it pauses it. Right? Everyone was expecting another nice beat, a nice little little pop. Who knows? Maybe we could see 150, 160 if they report good numbers. And what happens? The revenue was pretty decent, and then they happen to miss on the EPS side, and apparently looking to stay at those losses for every quarter moving forward. And then we're going to see a little bump going into Q1 of 25, and we can also see that the revenue slightly ticks up here from 6 million and change up to 7, up to above 8, slightly above 9, and then boom, 29.1 million, right? So that in my opinion is what's really going to pump the stock up. If they do beat here and people get it trending, and again they don't post wider than expected losses, maybe you can see that $2 to $3 range. And who knows, if it really starts seeing some big volume and some big FOMO coming in, maybe it could potentially fill that gap before going into 25. But in my opinion, 2025 is going to be the breakout year. And if they're saying they have enough liquidity to sustain themselves until then without issuing more equity, then again, we may be on to something here. But even last time, very quickly, we could look at some of the fundamentals. I mentioned that in my opinion, we could be reaching that turning point, and there is some potential value here. So the debt increased up here now to 8 figures, as you see, was 9.75 million, went up to about 13.25 million. So that's the highest it's been going back the last several quarters. But the assets we spoke about kind of slightly coming down, but holding here a touch below 450 million. But the liabilities completely chunked down and dropped like 70% here. And you can see we're down here at 40.5 million. So right now we're trading, right now they're holding assets about 11 to 1 on liabilities. Equity 400 million minus the 13 million. I mean, again, we can make the argument fair company value could be potentially even like 250 to 300 million in change, which of course would be a really nice jump in value from where we are here. That would bring you up to the high ones, like 170 potentially. But again, only time will tell. Book value per share did drop technically over the last couple of quarters, but it's sitting here almost triple where the stock price is currently trading. So in my opinion, I do still see potential here. I don't think it should come all the way down here. But again, if we come out the next quarter, 2 quarters, and all of a sudden losses are accelerating, but we're struggling to make a couple of million, but we're losing $2, $3 for every dollar we're making, we may potentially go back below this trend line and start to retest here the sub 60 cents. But obviously we'll cross that bridge when we get to it. And here, we can see some bounces off the 200-day. Looks like it's fighting to stay above that. MACD recently crossed to the downside. RSI middle of the road there, 54 on the daily. On the weekly, RSI middle of the road, 50. And we can see we pulled back below the top Bollinger Band. But again, if that bull flag is forming, we could potentially rally maybe up here to the 50-day moving average, 142 maybe in the short term. If they do decide to beat it up and it does break out of that potential flag we were looking at and drops out of that channel, maybe we can see actually 70, sub 70 cents again. But only time will tell. But we'll keep an eye on it. But I am happy for all you shareholders because at least they did beat on the revenue side. So that's a good sign in my opinion. And we'll end it there. So once again, stocks by the numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand markets are rocky and volatile and very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. And also, let me know if you guys, take a look at the chart here. Let me know if you see a potential bull flag, bear flag, or if I'm just kind of seeing things on my screen and nothing is actually forming. Very curious about you guys and your tech analysis on what you might see with this one. But yeah, subscribe to the channel, of course. I appreciate that, and I understand it's rough out there, but I wish all of you the best of luck. I want to thank you for your support and your time. Have a good day.